Yeah, join. Let me see. No talk, just join. If you join, wave your hand. So, guys, if you can hear me, just kindly type one. Let's wait for more people to join. Yeah, good afternoon, Chimobi. So let's wait for more people to join. And can you see my screen? If you can see my screen, please kindly say yes. Okay, that's good. So let's wait for more people to join. Okay, people are joining. And so if you know how to use MetaTrader 4, can you kindly if you don't know how to use MetaTrader 4, say yes. Timothy James, good afternoon, welcome. If you don't know how to use MetaTrader 4, say yes, I don't know how to use, because this is a beginner's class. So I really want to know where to start, or the exact place to start. I don't want to be doing something that some people might not understand what I'm doing or get what I'm doing. So it's a beginner's class. But if you don't know how to use MetaTrader 4, just indicate, just say I don't know how to use, so I can maybe go through it before moving on. So indicate if you don't know how to use MetaTrader 4. Okay, it means that everybody here that knows how to use MetaTrader 4. Let's just still wait. So this is the trade I called out this morning. I called this trade out in the morning, and the gold have been going up and down, kind of ranging. So, but there is news coming out by 2:30. So actually, I don't know what that news will do, but if I were to predict the news, my prediction would be buy. But we all know that news can do whatever it wants. So I don't know what the news might end up doing. So that's why I'm still holding this trade already, because it's consolidating already. So I'm still holding it because I believe that the news will push it up when they release the news. So that's why I'm still holding this trade. So let's get into it. I believe that there is nobody that don't know how to use MetaTrader 4. Everyone knows how to use MetaTrader 4. And I want to talk about money management first. This is the proper way I believe that you can be profitable in this forex trading. Your money management, in terms of your money management. Because I noticed that some people use as in size loss, as in some certain loss size as their entry all the time. Maybe some people use one certain lot, some people use 0.9 as their entry point all the time. And if you keep using one particular loss size as your entry point, you know that when the stop loss keeps changing, because this good now at trade, the stop loss never be the same. Stop loss do change. You enter one trade and the stop loss might be 50 pips, and next trade the stop loss end up be 80 pips. So if you keep using one as in the same loss size, you know definitely that the amount you will be losing will be different and the amount you will be making will be different. So I believe that the proper way to do money management, if you really want to do money management, is to calculate your loss size with the stop loss that we are using for that particular pair. What I mean is that what I drew now is from this point to this point. The stop loss, the pips here is 68 pips. Wait, please, if you guys can hear me very well and see my screen, can you say yes? Okay, let me see if you can see my screen. Please, can you say yes? Like not look as if I'm talking to myself. Please, if you can see my screen and hear me, can you say I can hear and see, please? Okay, so it means that okay, you guys can hear me and see my screen. Okay, then I will continue now. Okay. So, for instance, now let me use this particular trade. We took this morning. This level is our entry point this morning, and this is our stop. Our stop loss on this trade is 84 pips. Now, for me to use the same amount of money I have been using as my money management, the way I used to do my money management, because for instance, if I have $1,000 account now, okay, I choose to risk $100 in each trade. So if I choose to risk it, then now my stop loss is 80 pips, which is my stop loss then is 84 pips. 84 pips is my stop loss. So now, which loss size am I going to use? Because I want to keep using as in the same loss size in all trade because I'm having different stop losses. So what you are going to do is to calculate this stop loss, because this is 80 pips, which is 84 pips, which is that stop loss we are risking here. Calculate this 84 pips times all the different loss size we have. We have 0.01, 0.02, 0.03, 0.04, 0.05, 0.06, and you guys know that we have it up to 1,000 loss size. We have one as in 1.00, which is one standard lot. So for instance, now let me bring up my calculator and show you guys what I'm trying to talk about. But this is a beginner class. I know that beginners always make that mistake of entering trade with any lot size. So now we are 4 pips. Now I want to risk $100. Which lot size is better for me to use to get the exact amount that I want to use? So what I'm going to do is that it's 4 pip times. So let me try 0.9, which is 1 pip, $9 is equal to, it's giving me $75, which is not up to $100 I want to risk. Then if I choose to use it's 84 pips times, let me use 1 pip, 10 cents. Then it's giving me $92. Wait. Please, can you guys see the calculator? Oh, I'm not sure. You guys are not seeing my calculator. I'm not showing the entire screen. Oh. Can you guys see my calculator? I believe that you guys are not seeing it. Okay, you guys can see my calculator, yeah. Okay, but now because I'm sharing my screen, so I'm not sharing the calculator. There's no way I can share. Okay, let me share my entire screen. 1 minute. Let me share my entire screen. If I share my entire screen, I believe that you guys will see the calculator. I'm coming. I'm coming, guys. Let me share my entire screen. It's not possible. I can't share my entire screen. It's not possible. I can't share my entire screen. It's not possible. So what we can do now is maybe you guys are hearing my voice. Okay, Timothy. Okay. So different people ask me all these questions every day, especially newcomers. They don't know how to do money management. You cannot do a proper money management when you are using the same lot size in each trade. Because some people that have enough money, some people keep using one standard lot in each trade they're entering. Then if you use one standard lot size when you enter a trade of you risk, maybe your surplus is 50 pips. You guys are not seeing my calculator, but you can calculate as well. So let me do this for you guys to see what I'm trying to explain. Now 50 pips times 10, because one standard lot size is what is equal to $10. So now that's $500. Then if you're entering another trade, and for instance, the stop loss is like, let me say 84 pips times then 10. You see that now you are risking it as an $840, which the other trade you risk what is equal to $500. So if you are using the same loss size and your stop loss is not the same, you will keep risking different amount of money in each trade, which that's not good for your money management. So that's what I'm trying to do this. Even some advanced traders don't do this, because when you keep risking different amounts in each trade, your strategy might be working, and your money management will make it look as if your strategy is not working, and you might drop a working strategy because of the way you are trading. So that's why it's good for you to do your money management, right? Make sure in each trade you are risking, you risk the same amount of money. And so if you even make 1 to 2 in a trade, at least you know that you have to trade wise before losing the money. But if you are not using the same amount of money, the money you made in one trade, you might end up losing it in one trade. But if you are using proper money management and the same amount of money, if you enter a trade now and made 1 to 2, if you lose the next trade, you lose only one portion of what you made from the previous trade. So that's why I'm trying to do this. Some advanced people say don't know it because people ask me all the questions all the time. So people ask me the same question all the time. So how you do this is this way. You guys can see the 84 pips I wrote here. Okay, let me complete it. 84 pips. You guys can see the 84 pips I wrote here. So you can understand what this means. This is pips. This 84 pips. Sorry for this, Samra. Okay, this 84 pips. So this 84 pips now, this is what I'm risking on this particular trade, 84 pips. So now, if you want to risk $100 on this 84 pips, I'm repeating myself. What you are going to use now, what you are going to do is you can calculate it by yourself because this my calculator is not showing. You can calculate by yourself. So 84 pips times 0.9, which gives me $75. And this $75 now is not up to $100 I want to risk. So I will still increase my loss size. So let me use 1.2, which is $1.20. So which is $1.20 times 84. It gives me $100.80. So I can use this loss size now to enter this trade because I know that if I lose this trade, I will only lose $100 out of my account. So I can use 0 on this trade now. I can use 0.12 to enter this trade. So if you can, 0.12, or I can still call it 0.12, is equals to 1 pip, $1.20 as in 20 cents. So if you can calculate by yourself times $1.20 times 84, it will give you $100 80 cents or 8 cents. That's what it will give you, and it makes sense because now, if this trade go against you and we lose this trade, you are losing only $100. Now, for instance, we have another trade we are entering, and the stop loss is, let me say, stop loss is 50 pips. This is another trade, and stop loss is 50 pips. So if the stop loss is 50 pips, let's still calculate, and for you guys to see the way we can still risk $100 in this trade as well, the way we risk $100 in this particular trade. So we can still risk $100 in this trade. So now, our stop loss is 50 pips. So what I'm going to do now is go to your calculator and calculate again. 50 pips times, because I want to still risk $100. 50 pips times, let me say 50 pips times 0.2. 0.2 is 1 pip, $2. So if I risk $2, which is $2 times 50, gives you what? $100. So for this particular trade now, what we are going to use to enter the trade will be, so for this particular trade, what you are going to use to enter the trade will be 0.20, which is 1 pip, $2. So if $2 times 50 gives you $100, and on this particular trade, we are risking 84 pips. 84 pips times 0.12, which is 1 pip, 20 cents, gives you $100 as well. So do what I'm trying to explain here now, please. If you understand, can you say I understand? Or if you want me to give more example, can you indicate, because I'm moving on to another topic. So if you understand what I'm trying to explain here, or if it's useful, can you just indicate? Yes, yes. Shimobi, yeah, that's where we risk the same amount of money. Yeah. If you calculate it, you will see. Just calculate it by yourself. If you calculate by yourself now, 50 pips times $2, 50 pips times 2, which is 100. You know, 0.20 is equals to, as in forex now, 0.2 is equals to 1 pip, $2, which you know. So $2 times 50, which gives you $100. And the 84 pips, we are using a lot size of 0.12. You know that 0.12, which is 0.12 in lot size in forex trade, it means as in $1.20. So calculate by yourself 20 as in $1 20 times 40 times 84. It gives you the same $100. So that this is the way you should do your money management. So you risk the same amount in each trade you are entering. So it's not look as if you win a trade today and you made, like, for instance, you risk $100 today and you made like, let me say, $200. That's $100 you made from the trade you entered today. I'm sorry, pips on gold. Sorry for that. Okay, sorry. I've not read. Okay, let me read your comment. I'm coming. Yes, I understand, but I would like to know how we get the pips on gold easily, because it is different from currency. The price ranges are different from gold and gold. Okay, you use, as in Timothy, you have trading view, Abi? Or it's simple. It's simple. Look at it, Timothy. If you have trading view, you can see my mouse now. Look under here. Okay, if I point my hand, you cannot see. But if you look under, you will see where it's writing stop 8.41 and 0.41%. You can see where they write 84 as in 841. Then amount 750. That one in front of there, remove it. The 84 is the stop loss. The 84 is the stop loss we are risking on this trade. So, and again, this is the way you can also calculate by yourself. This is, they call it measure. Draw it from here to down here. You can see that it's still giving me 84. I'm not getting there exactly, but you can see somewhere it's writing 875. The first side, you are see where it's writing minus 8.75, then minus 0.43%, then where it's writing minus 87, that's your stop, that's your pips. You are risking 87 pips from this level to this level. Means that it's showing you now, it's showing 90 pips. Remove that 2 on top. That 2 is not among. You guys see what I'm talking about. The 2 is not among. The 90 is the stop loss. So it means that from this level to this level now is 90 pips. So that's how you check it, Timothy. And you can also do it manually this way. You can do it manually this way. Okay, now I will calculate it, but you guys will calculate by yourself as well. I will calculate it for you here right now, but check your own calculator. So for instance, now I'm marking out this. This is our entry point, as you guys can see. So this is the price of our entry point, and this is the stop loss. Then minus this 20.35.19. No need of writing the dot. Don't write the dot. If you minus 20.35.19, minus it from 20.26.32. So let's minus this both number. Minus this number from this, which is minus 20.26 32 from 20, 35, 19. So let's do it and let's see what will remain. That's your stop loss you are risking. So now I'm doing it by myself. 20, 35, 19 minus 20, 26, 39 is equals to, it's giving me 88 pips. For your calculator, you will see 880. Remove the zero. The 88 is your stop loss. Remove that zero is cent. Don't need to calculate the zero, hold the zero. The zero is cent. So 88 pips is what is telling me that we are risking here. You know that the way I mark out this and the way I mark out this, I cannot get the exact entry. That's why the stop loss is kind of 4 pips difference. So this is how you get the pips, Timothy. I hope you understand now. Okay, let me see the comments. I understand. I mean pips on go. Yes, yeah. Thanks for 10 bucks I got. Okay. Yeah. Chimobi, you are right. Yeah, it's 880. But remove the zero. The stop loss now is 88. The stop loss is 88. So now, what are you going to do? This 88 now, the stop loss is times it with all the loss size we have in forex trading. So anyone that tally with the amount you want to risk, that's the one you are going to use to enter the trade. So let me do the example again. Now the 88 pips is the stop loss. I'm coming, guys. So now it's 8 pips. No need of me writing pips. Let me not keep wasting time. Now the 88 pips is our stop loss. Now we want to still risk. Okay, let me say, for instance, we want to still risk $100 on this 88 pips. So what are we going to do now? The difference from here and the 84 pip are not much. So it might still be the same. It might still be the same 0.12. It might still be the same. Okay, let's do something that is different. So for instance, now we are risking, our stop loss is let me see, our stop loss is, let me clean this one out because as long as it's not among the example. So let me say our stop loss is 30 pips. Let me say our stop loss is 30 pips. Sorry guys, the way I'm writing this, I'm not good with using this. Their brush, man. So our stop loss is 30 pips. Now I want to risk $100 with this 30 pips. What are we going to do now? 30 pips times, let's start timesing all the loss size. Now if I times 30 pips times 0.01, we all know that it will not get to $100. Okay, let's just try it for the sake of this. For the sake of this, as in class or example. So now 30 pips, which that's what we are risking. That's what our stop loss is, times 0.01, which 0.01 is equal to 1 pip 10 cents. So 0.1 times 30 pips. 0.1 times 30. It only give me $3. So I don't want to risk $3. I want to risk more than $3. So now let me as in step it up because of time. Then now let's try use 0.30, which is 1 pip, $3. Then 1 pip, $3 times 30 is giving 3 times 30 is giving me $90, which is $90 now is not up to $100 I want to risk. So let's see, add this on. So let's use $3 times $3, that's 3.1, mean that $3 10 cents times 30. $3 10 cents gave me $93, which is not up to $100. Then let's try $3 20 cents times 30. It's giving me $96, which is getting close. But let's see, try $3 times 30 cents. As in, sorry, $3.30 times 30 is giving me 99. At least I can use this loss sign now to enter this trade. I can use 0.33 to enter this trade, which is 0.33 is equals to 1, as in 1 pip, $3, as in 30 cents. So you guys understand. So if you times $3.30 times 30, it will give you $99. Is close to what is close to $100 I want to risk for the trade. Okay, yeah, it's close. It's the same thing. Okay, let's times what we just wrote here, Shimobi. I think they are the same. It might correspond. So this 0.34 now means $1.40. Then let's $3. So let's 3.4, which is $3.40 times 30. It's giving $102. You can still use it because it's only $2 difference from what you want to use, from what you want to risk. So it's also okay to use because it's only $2 difference. It's okay to use, or if you wish, you can still use 0.33, which is 0.33 will give you $99. So what I'm saying now, guys, is it making sense? Do you see that it's kind of good for you to be risking the same amount of money than risking different amount in each trade? Because when you risk different amounts in each trade, your account balance will not be okay. Because for instance now, this trade we enter today now, which is the stop loss is 84 pips. And this trade now later go to our favor and hit 1 to 2. Now, if this trade hit 1 to 2 now, if you are risking $100, you are making, what is it called? You are making 80, as we are making $200 because it hit 1 to 2. And now you want to enter another trade because we are not using the same amount of money. Then you use a stop loss that is like, let me see, 150 pips. You know that on that second trade, if you are using the same loss size you used to enter the first trade, the first trade that is 80, the first trade that is 84 pips stop loss, and you enter another trade which is 150 pips stop loss using the same loss size, the amount you are going to lose if you lose those trades are not going to be the same. So that's why it's good to calculate your loss side and calculate your loss side with your pips you are risking to get the exact amount you want to risk. So your money management will be top notch, will be okay. It will not look as if you made $200 today and enter another trade tomorrow, and if you lose the trade, everything will just go. No, it's not making sense. So risk $100 per trade. Chimobi, it depends on your risk management. Normal, if some people have $1,000, they can risk, some people might risk $100 in each trade, but they know that if they lose 10 times, they will blow their account. So it depends on your risk. Okay, please, question. What minimum capital is safe to risk that one? Okay, okay. Yeah, 1,000. It depends on your risk issue. Okay, I'm back. So if I have $1,000 in my account now, I can choose to risk $100 in. My own advice now, Shimobi, okay, I will advise you to at least just slash it a little bit. If you can use, let me say, $70, because unless it depends, it still boils down on you. Because me now, the one I am, if I'm making $100 in a trade, that money is nothing to me. I might not take it. I might leave it to blow. Or as if the trade want to go again, let it go against me. But for some people, that $100 will be big money. So I don't know how ready you are. Whether now, if I tell you to risk, if I ask you to risk $75 in each trade, if you are making 70, if market give you 1-to-1, which is $75, will you be comfortable with it? Maybe if the market is ranging and you don't have choice than to close the trade, can you be comfortable taking it? Can you see it as money? Can it kind of solve some problem for you or pay some bills for you? Or if it's giving 1-to-2, which 1-to-2 will be $140, will it be okay for you? As okay, yeah, this $140 is okay for me to take. So you see, different things is involved, but I will advise you to risk, let me say, that $70 for you to know that okay, at least you have up to 15 times or something like that, get a back to trade before you can blow the account. But again, it depends on your strategy. If your strategy is really working good, or if your strategy is okay, or if you manage your trade well, you can still trade as in risk $100 in each trade, knowing that there is no way you can lose 10 times to blow the account. Because if I'm telling that me, I can do it, I can risk $100 in each trade, but I know that there is no way I can lose as in straight times, 10 times without winning some trade. And I know that any trade I'm winning will be 1-to-2, which it will be adding up. So me personally, I can do it without any shaking. So you can do it as well, but it depends on if that money, it depends again how you get the money. So different things is involved, Timothy. It depends on how you get the money, because some people now $1,000 might be their last card, might be their all. And you would not want to risk it anyhow. At least you're supposed to manage it well to raise the money so you not lose the money. So it depends on you, but to risk $100 each trade is okay. To risk $100 each trade is okay. Just do it. If that money is not that important, that maybe if it's not all and all for you, you can risk $100 each trade. And again, try again and follow your trading plans. This advice is for everybody. As in, I went through all this before I could be able to be a profitable trader. Try to follow your trading plan anyhow you are trading. Focus on that way. Meaning your strategy, whatever your strategy is telling you, maybe whatever setup you see before you enter a trade, make sure that setup is complete all the time before you take a trade. Because it's very important. Your trading errors might make you to be losing money. And you will be thinking that your strategy is the reason why you are losing money. And you might end up dropping your strategy. Jumping to another strategy that is worse than what we have before. So some of us in this forex trading, strategy is not our problem. The problem we are having is our trading errors and money management. The mistake we are making is the problem we are having, not strategy. Because we'll be using if you are using a good strategy and you are not managing well, you are making different errors when you are entering market. That errors might affect, it will affect your capital. And at the end of the day, you see that you are not growing. And you'll be thinking that the strategy is not working. No, it's not the strategy, it's your trading errors. So we need to shake all these things in our trading to know where our problem is coming from. Or even this signal people provide. You might be trading with someone's signal, and your own personal trading error, it makes you look as if the signal the person is giving you is not working. Okay, for instance, now I have posted, like, if I recall, like up to three trades, I think, without a loss. We have entered trade up to 3 times now that hit 1-to-2. I think, or I can't remember, but it's up to 3 times that hit 1-to-2. Which is, if you are risking $100 in each trade, that 1-to-2 times 2 or times 3, I cannot really remember, 1-to-2 times 2 or times 3, that if it's times 2, then it will be $400 for you. If it's times trade, it will be $600 for you. So this trade yesterday, I don't know how many people that lost this trade, because when that trade was in profit, because it was ranging. So when that trade was in profit, you guys can see that I wrote it today that whoever don't want to hold again should close, because what the trade is, because the other is not really moving. Then, but I hold mine. So when they released that news by 8, they released news yesterday by 8 p.m. That's what rallied that good up. So the news went against USD. Then the gold just spiked up. But it's their interest rate and whatever they released that yesterday night. So it made us lose the trade. So I lost that trade, but it's not nothing. So that's what I lost. It's nothing. It didn't affect my account because I've been winning 1 to 2, 1 to 2. So that loss is just a little bit of what I have been making is what I lost. So it's not. But some people, that trade might lose what they have been making for a long time, because they're not doing that trade. They might lose a lot of money, or maybe they end up over leveraging and wipe out everything. So there is a quote people used to say that what you make in 1 month, you can lose it in 1 day in forex trading. It's possible, and at the same time, it's not possible. If you keep doing your money management and avoid every trading errors, there is no way you can lose what you made in 1 month in one trade in a day. No, it can happen. And if you don't overtrade in a day, so that's why it's important for you to focus on your psychology and do your money management to save whatever you are making from the trade. So before I move on again, if anybody have any question, please can you kindly ask if you have any question. And about this loss size of 18, do you guys understand what I taught you guys about? So let's move on to another thing. So if you have any question, ask, and if you understand the loss size of 18, just indicate so we can move on. Okay, this is good. This good is buying again. It's going to our favor. Yes, I know. Okay. This trade is in profit. The gold is in profit, but we're having news by 2:30. It's in profit again. We're having news by 2:30, but let's see what we have. I believe that the news will be buy. So me, I'm not closing my trade. I will leave it. So let whatever I want to have, let it happen. Even if the news went, and if the news favor, if the news is good for US, I know definitely good withdraw. But if the news is against US, good we buy. So I'm not closing the trade. I will hold it until they release the news. If I still lose the trade, it's kind of what I made in one trade, the loss yesterday, and if I eventually lose the trade today, it will be what I made in one trade. That's what I lost in 2 days. So the money management is okay. But I believe that the news will be buy. I'm not sure that retail says we favor US. It will be against US. So that's my prediction for the news. So, but if you don't want to keep holding your trade, you can close when we are getting close to 2:30. Now it's 2 already. So when you're getting close to the news time, you can take the profit, whatever is giving you, if you don't want to hold. If you check what is giving you, if it's okay for you to close with, just take it. Forget about the rest. If you're okay with what is giving you before that news, just take it. Because me, I don't know where this trade will get to before that news, but if it's 1-to-1 plus, if it's giving us 1-to-1 plus, and now the news is getting closer, I might close it. Because it's better for me, because that news might still go against us, or it might still move the market to our favor, but nobody can really tell. So it's better sometimes maybe if you check, you take what is giving you, as long as it's up to 1 plus, you can take it. But it depends. So if anybody have any question, depends you ask, please. I understand the lot size. Okay. If anybody have any question, please let the person ask. Uh, so okay, I think there is no question. Then I'm moving on. So some people don't understand what this is, as in where the surplus is and where the take profit is, because I receive different messages on my Telegram channel. People, as in on my Telegram, people asking where is the stop loss and where is TP. This is the stop loss. Okay, let me use the current one. So a lot of offline will not be here. I'm deleting this. Let me delete all this. Okay, it's not disturbing me, sure. So this where the red line, where this red line stopped here is the stop loss. And if you look here, look at this number here. That is the stop loss number. This red one is the stop loss number. The price that is how will I put it? This the stop loss price. This is it. And this particular one that looks like black color is the entry point. And this green one is the take profit. I know different people keep asking me this question. That's why I mark out this thing this morning and send it, because I receive different messages on my Telegram. See, even yesterday, the same thing, or day before yesterday, I think. That's why I mark out this. So this, whenever you are seeing it, this last one, where the red line stopped is the stop loss. If you just look across there and check at the price size, you will see whatever number you see that it has the red color is the stop loss, and the entry is here. Look by your right, and any price you are seeing that is marked with the black stuff or black color is the entry. This is TP. Look by your right. This particular number is your TP. So that, guys, that's what it is. So I don't know. I know that some people don't understand it. So this loss size of a thing, I know some of you might know it, but you can also calculate it via what is it called? Via babypips.com. Okay, let me show you guys. I know some people know it and some people might not, so but let's see do it. Let's use today as the loss size. So people know that okay, what we did today is talking about the loss size. Or it's still simple, no need of going to the baby pips and doing that one, because if you can get this manual, because you have to still get the stop loss to go to the baby pips to put up. Okay, if you guys want me to talk about the baby pips, please can you indicate? So let me not just waste the time or doing what you guys already know. If you want me to go to the baby pips and show you guys on how we can still calculate the loss size on that website, please can you just indicate? If you want me to go to the babypips.com and show you guys on how to calculate the loss size there, please indicate. Just say yes. And if you guys understand, just say no. Then we can just move on. Okay. Are you guys hearing me? Please, if you can hear me, can you just indicate that you guys can hear me? Shimobi, sorry, what do you mean by no? Can you hear me? You can't hear me. Okay, 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 hear me. Okay, okay, okay. Your no means okay, 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 okay. Okay. So this is the reason why I took this trade today. So let's move on because I think everybody understand the loss size of 18 now. So everyone understand the loss size. So this is the reason why I took buy today. You guys can notice that since all this while I have been selling, 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 selling. So this is the reason why I took this buy today. I call out this buy signal today. So this is far time minus. So this the life business. Okay, it's off. I need to delete all this. I don't want to clear it at once. If I clear it at once, everything here now will be out. That's why, please just bear with me. Let me delete this one after the other. Is it delete now so at all? I think it's deleting. Just bear with me. Let me delete it. If I clear it, everything will go out at once. And every stuff I have on this trading view now will go out. So you guys can see where I'm pointing or what I'm talking about. That's why I'm deleting it. This is taking time. Okay, I think I'm done. So this is the reason why I took this trade today. So you guys can see that gold broke this structure here downside. So this is why I took this trade. You can see that gold broke this structure here. That's BOS. Gold broke it here on 4 hours time frame and came back and take out this side. So this is where the market did change of character. This is when the market did change of character yesterday, which is church. So you can see that this is BOS, market take it out, and the down trend didn't continue. And gold turn back and take out this side. You can see that this is the high, and this is the higher low, and this is the lower low. The market came back and take out this side, did change of character. That's why I started buying gold again. That's why I stopped that selling, because it did change of character here yesterday. And if you look daily time frame, this is gold rejected on 50 EMA, 50 moving average. Gold rejected on it. I saw the rejection. I was looking at it, but I can't just close out the trade or ask people to close because gold is rejecting it. No, because it can still break it. But I saw the rejection. I saw when we were inside that trade, I saw this keep hitting it and keep rejecting from it. But the reason why I still stayed again is because of the news. I believe that the news might drop the gold, but unfortunately the news pushed it up. So it rejected on 50 EMA. So on these 4 hours, it go the change of character here. That is the reason why I started looking for buy today, and which in the morning here, I saw a confirmation here. If you can drag this line backward, you will see where market touched it 3 times, and not only touching it 3 times, this is bottom and this is bottom. There is double bottom here. So this is also giving me a double bottom, which is here and here. And when market take out the neck, that's when I call out this trade. It was giving the bottom here. And if you drag your horizontal line here, you still get a trade touch, because I checked all this. There is a trade touch on this level, but I don't going back because as it's kind of long. There's a trade touch here, and trade touch and what is equal double bottom. So that's why I took that trade. That's why I call it the trade in the morning. You can see the first one and second one. First bottom, second bottom, and see the neck. Market take out the neck. That's when I call it that. But it later drop and take out too. I know what they did here, because some people's stop loss will be just somewhere here. No, I don't do it. If I'm taking trade here, my stop loss will be under the next psychological level. This number is a psychological level. You can see that 2075.05 is a psychological level. You can see the line. So that's why I dropped the stop loss below it. But I knew that they always come back sometimes to take out the low, to take out people. That's what they call stop loss funds, or some people say call it dollar or liquidity. So they come and take it out before moving the market. And you see the way the market rally after they take people out here. It rally up and drop, then come back to retake this one, and thank God it's moving up now. So this is the reason why I took this trade in the morning. So any question? Okay. Okay, I understand lots. Okay, calculation by no. Boss, the strategy you use, can it be traded for currency pair as well? Yes, you can use it on any pair. You can use it on any pair. It's not only on gold. You can trade it on any pair. It works for GBP, US30, anything. You can trade it on anything. You can trade it on anything. You can trade it on anything. So that is it, guys. Let's stop here, because this life is getting to an hour. It's getting to 2 o'clock, 3 minutes to 2 or 2 minutes to 2. So let's prepare for the news and also watch our trade, because the trade is in profit. So let's focus on the trade, whether we take profit or whether we still hold. So let's focus on the trade, guys. So let's see next Thursday. So we have another class on next week Thursday. So thanks, guys, and God bless.